Record button for everyone. Okay, can you see the money management slide on your screen?
Yes.
Everybody good? Okay,
Yeah.
perfect. Oh my gosh. Thank you. Go. Yes, thank you for the thumbs up. Okay, awesome. Well, welcome tonight. My name is Amy Armstrong. I'm the Associate Vice President for Alumni Engagement, and I'm CEO of the Alumni Association. And I'm so excited to have you all with us tonight. This is our last online virtual session for our Financial 101 series. And I'm so excited because tonight is a very important topic that will affect you for the rest of your life. This is credit reports, and I can't think of any better group to walk us through what it means and what our reports are telling us than the UL Federal Credit Union. And tonight, we're very pleased to have Monica Ducluit with us, who is the CEO of the credit union. And Monica, would you like to introduce your team that you brought?
Sure. Good evening, everyone. Thank you guys so much for attending. Tonight I have two of my I call them colleagues. I don't like to say employees. I like to say colleagues. With us tonight, I have Jason Thornton, who is our VP of Lending. So Jason will be attending with us. And then I also have Natalie Aubrey. Natalie is one of our certified financial counselors. So Natalie will be actually the one guiding the presentation. So um, I'm hoping we do, out of the attendees that we have, I do hope that you guys were able to fill out um, the authorization forms for us to pull you guys credit reports and send it to you. Again, like the disclosure said, these are soft pulls. It does not affect your credit score or anything. So hopefully, if you did not get to do that, we can actually do that. Jason can do that for you while we're going through the presentation, or we can do it after the presentation. But thank you guys for attending. Hopefully, we can give you some great information. And with that, I will turn it over to Natalie.
All right. Good evening, everyone, and welcome to the college edition of Credit Reports. Like Ms. Monica said, if you haven't gotten a chance to get with Mr. Jason to pull your credit bureau, do that soft pull, we can definitely do it anytime this evening, tomorrow, whatever benefits you the best. So shoot us an email, we'll get that done for you. Okay, we're ready to start and go ahead with the slideshow. And the first thing we're going to talk about is your three different types of credit. First one you have is called revolving, and that's different payment amounts each month. The percentage of that balance will determine the amount that's due. So what you owe rolls over to the next month plus your interest charges. Example, that would be on your credit cards. So be mindful when you're spending on those credit cards. That's part of your revolving. The next part you're going to have is called installments. Fixed payment amounts each month. The total borrowed is to be paid back over an agreed amount of time, plus the interest payments. This would be your car loans, your mortgages, your student loans. Those are considered installment credit. The next type of credit we have is an open. Oh, there we go. Is the open. It's pay your balances in full every month. We will not report to the credit bureaus unless payments are delinquent. Examples of those are going to be like your electricity bills, your cell phones, rent, gym memberships. Be mindful of those. Anytime you're late on a cell phone payment, anything over 30 days, they're going to report. But other than that, you're not going to see it. So just be mindful of that. Those are your three different types of your credit. The next one we have is talking about establishing your credit. And here's some terms that you should know and keep in your mind when you're, you're checking out, doing your credit, pulling a credit score, anything like that, looking for a car. First one is going to be your credit. That's the ability to obtain goods or services before payment, and that's trusting that you'll pay it back. The next one we have is your credit bureau. You're going to hear this word a lot when it comes to financing anything. We're going to have to pull your credit bureau. These are companies that are going to compile details about your credit history, and then they're going to share it with others. They're going to share it with the three bureaus, which is TransUnion, Equifax, and Experian. The next thing we're going to talk about is your credit score. This is a three-digit number that represents how likely you are to pay back your loans and your obligations. Your credit score is going to stay with you for as long as you're alive. You know, it's gonna set the bar for everything, your credit score. Collateral, that's your cash or your assets held by the lender that's gonna pay your debt if you don't make the payments. So in other words, if you have a vehicle, that's their collateral. Your credit report, detailed record of your credit accounts and how you have paid them over time. And the interest rate, we're looking at an APR. This is the amount charged to borrow your money, and this is what you'll be paying back along with the amount of that loan. All right, and here's 5 ways to establish your credit. One's going to be a credit builder loan. That's typically found at a credit union. We do starter loans for people with little to no credit. 2, a secured credit card or a loan. A collateral is required. So an example of that was you take $500 and you deposit it into a bank account, savings account preferably. And what they do is they put a hold on that $500 for a period of time as to why you have this, as to how long you have this credit card until you pay, you learn your history, make payments. After 6 to 12 months, you can revisit it and make it unsecured. So keep that in mind. But starting off with a secured credit card is probably the best way to go if you have nothing established yet. Number 3, an unsecured low interest rate, a low limit credit card. If you can't, by all means, put up the $500 limit, you may start with something lower than that, $300, $250, something like that. You don't want to treat this new purchasing tool, though, as free money, but only as a way to establish good credit. And I have college kids as well. I always tell them, put your gas on it. At the end of the month, when it bills out, pay it out. You know that you need gas in your vehicle, put aside for that. Get a cosigner for your credit card or a loan. Sometimes a parent, you know, be mindful as to who you're picking to be your cosigner. You don't know what their credit is or what state they're in to be able to cosign for you. And 5 is you can be an authorized user on a credit card. Be mindful, guys, that this is something that is probably going to be going away in the near future, is getting away from being an authorized user on a credit card. Okay, your credit score. This is taking data from your credit report and creates a FICO score, which is Fair Isaac credit score for each credit bureau. And then you're going to rank on the scale between 300 and 850. I've never seen a 300. I hope we never do see a 300. But that is pretty much the lowest you can go. Higher scores can qualify you for larger loans at a better interest rate. And the score change frequently depends on your credit behavior. 30% of that is going to go towards amounts that are owed. And what it basically does is it takes all your credit, whether it be revolving installments, everything, and it takes that percentage, it creates a percentage as to how much you owe. And then 10% of that is going to be new credit. You just recently purchased a vehicle. You just recently purchased a home. You got some new credit cards. That's going to be 10% of what's going to be new credit. So if you've done a lot of things recently, you know, got a credit card, got a car, keep in mind 10% of that is going to could make a difference if you're purchasing a lot of new things at one time. 15% of that is going to be your length of your credit history, and that's how long you've actually been paying on things. Whether you got your first credit card or installment loan right out of high school, just to start building that credit, 15% of that is going to help establish your credit score. And then 10% is going to be the credit mix. That's just a mixture of your installment, your revolving, things like that. 35% is going to be your payment history, and that's how well you make your payments. Paying them on time, of course, is going to be your best bet. Falling behind on that on your history is not going to be good for your credit score. Does anyone have any questions at this point? No, we're gonna keep going. All right, and here's some reasons why your credit report is essential. It affects your ability to borrow money. Lenders usually check your credit reports before lending you money. They make their decisions based on your credit worthiness. Credit reports are the basis for your credit score. Keep that in mind. Credit scoring software calculates these scores by analyzing the debt and the payment information included in your credit report. Lenders also use credit reports to help make lending decisions. Your credit score helps lenders set the interest rates of various loans and whether to take a borrower as a customer at all. So please keep that in mind. You know, your credit score Like it can mean a lot. Does a lot of different things for you, and it will definitely set your interest rate. And if your credit score is great, 800, 850, you're looking at the best credit rate there, the best interest rate there is out there. But if you're looking at something more about a 450 range, you're probably looking at a much higher interest rate that can definitely lead you into the teens, and you're going to pay a lot more in interest on that loan. Your credit report can also help you recognize your credit fraud. If it's left unchecked, credit fraud can damage your credit and require a lot of time and effort to correct. And this is always a good reason why you should be checking your bureaus. Checking for fraud because it is out there, it happens. All right, your credit report. Some companies are not required to report your activity to the credit bureaus. Each credit bureau may have different information on file for you. Some will be positive, some negative information. It can stay on your report for up to 7 years. If you have a bankruptcy, you can be looking up to 10 years. So keep this in mind when you're going through the phases in your life as to what needs to be done as far as you need to pay off things. If if it comes to having to file a bankruptcy, just know how long it's going to follow you. What's included in your report is your open and closed-end accounts. That includes your loans, accounts, any type of account sent to collection agencies, your tax liens, bankruptcies, judgments, your payment history. You're on time. You're on time on your loan, your car notes is going to show that. It's going to show that you've never been late. Your payment's on time. You're late, it will definitely show. Anything over 30 days, it will report. It'll report again in 60 days, it'll report again in 90 days. You missed the payment, that's going to be on there. It also will request who has requested to look at your credit history. So if you go to a car dealership and you want to apply for a loan through them, be mindful that they're just reaching out to multiple creditors. They're not just going to say, okay, let me run yours through the UL Credit Union. They're just going to looking for that best rate for you. So they're pulling a lot of different creditors. So you may see a rise in that, and who has requested your history. It's how many people that are pulling your credit bureau, because sometimes it could be five to seven different agencies pulling you at a time. You want to review each report for the accuracy and dispute any of your errors you find. Is your account and personal information accurate and up to date? Check your social, check your date of birth, check your address, check all of those things. Are the accounts and the loans really yours? Example, if you're a twin, you're a junior or a senior, those are things to look out for because twins, normally their socials aren't many numbers off. So you can definitely have a risk of that happening, where it's not really yours, or if you're a second or a third, a junior versus a senior, something of your father's or vice versa may be on your credit bureau or not reporting on your credit bureau. So keep that in mind. And if there are debts that you owe that you maybe forgot about, some medical bills, you went to the ER a month or two later, you moved and they don't have your new address on file. Well, these bills, and you're thinking, oh, I must not have owed anything. Insurance must have covered it. Well, they're probably still sending to an old address. This is another reason why you want to check your credit bureau, because if you haven't paid these medical bills, they're going to show up on your credit report. So make sure that you're keeping an eye on that and get with those medical facilities and make arrangements to pay it to where you can get that taken care of off your credit report. All right, and here's the three credit bureaus. There's Experian, Equifax, and TransUnion. Each bureau has its own scoring model, and not all accounts report to all three bureaus. I've always been told it's kind of like East Coast, West Coast kind of thing, who reports to who. You may have one thing reporting to Experian, but it's not reporting to Equifax. And that's why it's important to pull all three of your bureaus at some point. You're entitled to a free annual credit report every year. Credit reports can have errors, and they will help you, and it can help you spot identity theft. And that's another main thing that we see a lot of, the identity theft. And that's a good way to check your credit reports. Make sure everything that's on there listed belongs to you. If it doesn't, contact the bureaus. The numbers are listed right there for you. You can always go to Google, research it, but make those efforts that you need to take care of your credit bureaus. All right, and it's time to request your free credit report. Free credit reports are available once every 12 months from each credit bureau. Credit score will not be included in that credit report, but you will definitely see what's on there. You won't actually get your credit score until you actually go to a creditor that's going to pull it to make a loan. www.annualcreditreport.com is the website you can go to. And another thing is you don't have to pull all of them at one time. If you want to do it, some rather pull them every 4 months. Pull Equifax, wait 4 months, pull Experian, wait 4 months, pull TransUnion. Kind of gives you, every 4 months, you just keep that cycle going as to what's hitting your credit bureau. Or if you prefer to pull them all at one time, you can as well. It's really your choice when it comes to that. Anybody have any questions? No? All right. All right. Why does your credit matter? This right here is an example of a 2024 Toyota Camry. The price to borrow is $35,000. The term on that loan is 60 months, which is 5 years. Person X has a credit score of a 750. Person Y has a credit score of 599. The interest rate for person X, 5.59%, which is the going rate right now. Person Y is looking at a little bit higher rate, 17.95. Monthly payment you're looking at for person X is 670.10. Person Y you're looking at 888.10. The total interest that person X is going to pay is 5,205.61. Person Y is going to pay 18,285.96. So keep in mind the total that person X is going to pay 40,205.61. Person Y is going to pay 53,285.96 at the end of this 60-month term. So person Y is actually going to pay $13,080.35 more than person X for the exact same vehicle at the exact same price. So keep that in mind. That is why your credit score is so important. It makes a big difference whenever you're financing. One thing you can keep in mind though, if you have no credit established, you're going to have a little bit higher rate in the beginning because you have nothing. So that's just the tier you would fall in. But here at the credit union, we like to offer our members to say, hey, after about a year, if you had this finance, let's revisit, let's pull your credit score. Let's see if we can refinance this. Let's see if we can drop that interest rate for you. If you can afford the same monthly note, great. But if we can drop your interest and save you on the term and the interest of this life of this loan, that's awesome. So don't think that there's not choices, that you're just stuck with this for 5 years. If that's where you have to be, that's where you have to be. But know that there's always an option a year later to try to refinance it at a lower rate. All right. And manage your credit, manage your debts and your payment obligations. You want to pay your loans and your bills on times. Utilize auto pay. I know all the banks, all the credit unions have it. Set up those automatic payments. Everybody has a phone. Everybody has an iPhone, some type of a smartphone. Put it in your calendar. Use the calendar on your phone if you don't want to utilize the auto pay. That way you know 3 days prior, hey, your note's due in 3 days. You got to make that payment. Don't try to go past. Don't try to expect that you think you have a 10-day grace period. Most of the time you do, but don't take advantage of that. Pay it on the day that you have it scheduled to be paid. Don't avoid the medical bills. Call them and request a payment arrangement. You can call any type of medical. They will set up any type of payment arrangement with you. If all you can afford is $10 a month, let it be. Pay that $10 a month and eventually it'll fall off. Reduce your debt. Refinance existing loans and your credit cards to lower your interest rate. Same thing with the credit cards, as I said, with the refinancing of a vehicle loan. Once you've been established, go ahead and see if you can redo your credit card. See if you can lower that interest rate. See if you can get that lower because nobody wants to pay these high interest rates on anything. Using a credit card, you want to make your purchases that you can afford. Ask yourself if it's a need or if it's a want. And then sometimes it's an emergency. Emergencies happen. Bad things happen to good people. You catch a flat tire, you gotta put wheels on your car and you gotta roll. So just keep that in mind. That is something that you wouldn't be able to avoid. Try to pay off those balances every month. That equals no interest. But if something happens, you get a flat tire and it costs you $300 to place the tire, then you make those payments and you pay it back as you can. That's what those credit cards are for. Don't go take them into a shopping spree, we're gonna go crazy in the mall and we're just gonna go shopping for everything. That's a want. That's not a need. You want to keep the balances low on your credit cards and any of your revolving credit that you have. You don't want to max out your credit cards. That'll tank your credit score. Keep that in mind. Managing those credit cards is a really big thing that you want to keep in mind. And you have to realize too, a lot of credit card companies don't even have grace periods. So keep that in mind when you're making those monthly payments. If it tells you it's due on the 11th, it needs to be paid on or before that date. So keep that in mind because once you're late, and they're going to start calling you right quick. And here's some credit card tips. What to consider when you're shopping for a credit card. First of all, you want to look at the rate. No credit, it will equal a higher rate. But like I said, revisit that after a year that you've been paying on this and see if you can get that lower. Fees, your annual fees, cash out fees, whatever would benefit you. You want to make sure you're reading that policy as to what the fees are. Your rewards, cashback, items to choose from, gift cards, air miles. You want what reward is best for you. Everybody loves cashback, but if you're a frequent flyer and you fly a lot, air miles might be the best way for you. Gift cards too. You may pile up your gift cards and then use them on rainy days. It's really what benefits you the best when it comes to the rewards. Be aware of the balance to limit ratio. You do not want to max out these cards. Maxing them out will tank your credit score, like I said prior. Um, you want to keep them, I think it's usually like below 30-40% as to what you owe versus what your limit is. Your credit cards, they can be very useful, emergencies, credit builder loans, or they can just be very dangerous, maxing them out and they will lower your score. So be mindful when it comes to credit card. And by all means, we don't want you to be scared of a credit card. They do serve a great purpose, but you have to be able to manage the credit card and the use of it. And again, paying off that balance monthly will equal no interest. So it's basically having a free loan for a month if you think about it. All right, and here you have a credit card authorized user. Like I said, this is something that will in the future will be going away, but it's still in effect now. How does becoming an authorized user impact your credit score? It can help you, it can hurt you, it can be a great thing. Card issuers are not required to report an authorized user to the credit bureaus. If they don't, the authorized user's credit score will not be impacted at all. So you can be an authorized user and your credit report would never know. It could hurt your credit if the primary card holder says they make their payments late. They have a high credit utilization rate, which means they owe close to the max. They maintain the account for a short period of time. They've had it for under about 2 years. That's not a long time with a credit card. So be mindful. That's ways that it can hurt you. But it could help your credit if the primary card holder makes those payments on time, maintains the low credit utilization, has maintained the account for a long time. Those are ways that it can help you. So just be mindful. If you're going to be an authorized user on somebody's credit card, ask these questions. Hey, how long have you had the credit card? You owe a lot of money on it. I mean, if you're going to be an authorized user, I would assume you'd be able to know these things. Just be mindful for that. Does anybody have any questions about the credit card information? No? All right. All right, and let's just keep in mind when you are paying on your loans, day one, late fees are charged after you don't make that payment on time. When you reach 30 days, it's going to be reported to your credit bureau. When you're going to reach 60 days, you're going to see an increase in late fees, which is probably doubled as to what that first late fee cost you. Your interest rate could increase. The second report is sent to the credit bureau. So that's now 60 days, 2 months of it being delinquent is reported to your bureau. At 90 days, you're looking at additional late fees. And then the third report is sent to your credit bureaus. Now, after that 90 days, you're looking at anywhere between 90 and 180. This loan is going to be charged off. It's going to be sent to the credit bureau showing that it's charged off. It's going to show that it's sent for a collection for someone to collect on, whether your financial institution is going to file suit on you. Your phones are going to start ringing off the wall probably every day because they want to try to collect what they can. And this is going to stay on your credit bureau until it's paid. Now it's going to show as a collection, but it'll show as a collection paid. So keep that in mind. Showing it as paid is better than showing that you still owe it. But if you can avoid it getting to that stage, please do. Nobody wants to be in a charge-off situation. All right, and here's some things that you may not see on your credit bureau unless you are delinquent. Rent. You rent a house from someone, you've been there 3 years. Rent's going great. Well, for all of a sudden you lose your job, things happen. Well, as soon as you're late, they can, and more than likely they will start reporting that to your credit bureau. Your utilities, whether you're with LUS, Slimco, Energy, utility bills, water bills, things like that. It's all good. You'll never see them hit your credit bureau until you're late. Cell phone provider, don't be late on those. Or your gym memberships, cable, Cox, whatever you use, anything like that. You won't see any of those on your credit bureau unless you fall delinquent on it. Once you fall delinquent, then you'll see them on there. So they won't report the good, they just want to report the bad, you know. Anybody have any questions so far? Kind of zipping through this. Yeah, okay. All right. This right here is what we call the debt snowball effect. I think it's pretty good. It's amazing little strategy to use. Step one, you're gonna list all your debts from your smallest one to the largest one. Except for your mortgage. Don't list your mortgage in there. Mortgage is a long-term commitment. You know, most of you have 25, 30-year mortgages. You don't want to list that in there. It includes like student loans, credit cards, automobiles, anything other than your mortgage, list them. List them from the smallest to the largest. Step two, pay the minimum on all of your debts, all of them, except for that smallest one. Put extra money towards it. Put extra money towards that smallest debt while you're paying the minimum on the rest. Even if you're applying an extra $15, $20, put that extra on there. Step three is you want to pay off that smallest debt. Pay off your smallest debt and apply money from that payment to your next small debt. So say that note was $150 a month and you were paying $170. Now take that $170, apply it to that next smaller debt on top of what your minimum payment already is on that. And step four is basically you're going to repeat that. The goal at this point is to become debt free. I don't know if any of you have ever heard of Dave Ramsey. This is basically where this comes from. A good thing to follow if you can. I know Jason's going to go over a credit bureau. Jason, you want to take over now? Before we finish it up?
Sure. All right. Let's see. Amy, if you don't mind putting the credit bureau on the screen for me. All right. What we have here is it's an actual credit bureau of a member of ours where obviously the information, the sensitive information has been redacted. And I thought it'd be a good opportunity to go over it and take a look at what your credit bureau looks like. Now, you can always go through another source like we have Savvy Money or there's a couple other places out there where you can get your credit score. Normally that comes through TransUnion, like Natalie mentioned earlier. That's one of the 3 credit bureaus. But this is what we look at every day. And we have the ability to do a soft pull on our members or whoever needs it. And we use this to help with budgets or help rebuild your credit or do any type of financial counseling that you may need. You'll see a lot of places out there that will actually charge you to help you do this. And this is something that we do for free. We don't charge for this service at all. So real quick, we'll go over this credit bureau. You'll see the top part of that information. It's inquire information. That's what was used to pull this credit bureau. It's your name, your address, your date of birth, and your social security number. Then you'll see separated by that dotted line, the consumer information, name, address, social security number, and date of birth again. And when you get your credit bureau, you want to make sure that all this information is correct. Sometimes your last name may be misspelled, or maybe social may be a little off. You can save yourselves a lot of problems by correcting that initially, rather than when you need to. The next section down there, you'll see the additional consumer information, and that was all the former addresses that every time this member made a loan application, he used or she used for addresses. So it looks like this member moved a couple of times, so it's showing the previous addresses on the credit bureau. And then same thing with employment information. Every time that member applied for a loan, every one of his jobs was listed there. So his employers are listed there, going as far back as probably 20 years. So it's all captured from the loan application. So if you start off with your first job right out of school, it might be I don't know, Google or whatever, and then 3 years later you move to Amazon, then it'll go your former employer will show Google, and then your current will show Amazon. So scrolling down a little bit more, you'll see the file summary, which is pretty good. It shows the oldest open date, which is November of 2000. So this person's got about 24 years of credit experience, which is pretty good. The newest date shows May of this year. So this person applied for credit in May. Number of total accounts you'll see there is 31, which is a good amount. And depending on the age of the applicant, it's probably pretty good. You don't want to have 31 accounts at a younger age, but it seems like this member's been borrowing for a while, at least 24 years. And then there you'll see high credit and high limit. It looks like his high limit was at 490,000. So that's probably a mortgage. So at one point, this member applied for a $490,500 loan. And again, that's probably going to be a mortgage or a very, very nice car. The current status you'll see, I think that says 31 ones, which means that 31 of his line items are paid timely. The twos are 30 days, the threes are 60 days, fours or 90 days, so forth and so on. So you never want to show up and having entries into anything other than ones. Everybody see that where it says current status? That person's got 31 ones. That's what you want to see as a loan officer. You want to see that this person pays all of his debts on time. Okay. Going down the modeling score, this is what everybody's interested in. You'll see right there the score itself is 809. And like Natalie mentioned earlier, the range is from 300 to 850. So anything in the 800s is phenomenal. 700s is really good, so forth and so on. 600s is kind of the median. 500s, you kind of get into some challenge credit. 400s is pretty, you're really challenged credit. And like Natalie said, anything in the 300s, I've never seen it in over 20 years of lending money. So, the higher that number, the better. 850 is the highest, and 850 is very rare. You're only going to see a handful of those in a lending career. So 809, this member will probably get anything that they wanted in the credit union with an 809 credit score and get our very best rates. File information, which is the next section. You'll see the file was established in 2004. It only goes back 20 years. So this member probably had credit established earlier than that, but again, it only goes back 20 years. And then the most recent activity, it looks like the member applied for credit in May of 2004. The trade line summary, it tells you how many revolving accounts the member has, how many open, how many installment, mortgages, lines of credits, and others. And it kind of just gives you a basic synopsis. You'll see kind of towards the middle of the screen, the total balance of all the revolving credit is just under 18,000. The total of installments is 550,000. So the installments are probably a mortgage, maybe some automobile loans, any signature loans that the member might have. Those are all installment loans. And then kind of the next column over, you'll see the actual payment of those, and then the schedule payment. The schedule payment, this member owes a grand total of about $5,400 every month in installment loans and about 107 in revolving. So, they've got a good amount of debt there. Anybody have any questions so far? It's kind of like reading the matrix. I know there's a lot of zeros and dashes and numbers and stuff. But again, we break it down very easily for you if need be.
I do have one question. Going back up to the FICO score part where it says narratives and it gives the explanation of I guess why. Can you go through some of those and what that might mean?
Absolutely. That's a great question. So those narratives, the credit bureaus will actually put out 4 different narratives and give you an explanation as to why it's not an 850 credit score. So in this particular case, too many accounts with balances, too many consumer finance company accounts, and I missed the first one. Ratio of balance to limit on bank revolving or other revolving accounts too high, and an amount owed on revolving accounts is too high. So in this particular case, the credit bureau actually gives you 4 reasons why it's not an 850. So everybody's going to have their own four. Now, in this particular case, Kayla, this is an 809. So it's kind of a weird number because they've got to put something out there. But in 809, again, anything over 750, we consider A plus. So, and they'll just give you, even if it's an 849, Kayla, they will give you 4 reasons why it's not an 850, even if you have an 849, which is kind of weird. The higher the number it gets, you kind of just ignore that because, dear God, the guy's got an 849, and then, they've got to put something. So, it's really good information if your credit score is between, say, 500 and 700, and it'll give you an idea of what you need to work on to start building your credit.
Jason, I have a question that came in. It was just sent to me confidentially or securely through the chat, and they want to know, is it better or worse to have several credit cards but have no balances? Does that help or hurt?
It actually helps. And the way it helps is that if you have no balance, then if you remember correctly what Natalie was saying, what makes up your credit score, that balance to limit ratio, the lower it is to 0, the better it helps your credit score. So I'll give you an example. Say you have 2 credit cards and they each have a $1,000 limit. One credit card is maxed out. The other credit card has a 0 balance. So you have $2,000 worth of total limit, but you've got a $1,000 balance combined. So you've got 50% utilization on that, right? Your credit score will go down 50 basis points because you've used up 50% of your total utilization. Now, on the flip side of that, if you have 2 credit cards with no balance at all, well, then you've got a perfect score in that category. And then the longer you keep them open, again, Natalie said the age of your credit helps you as well. So I'll use my, this particular member, it looks like this member's got a lot of credit cards that are fairly old. So that's helping this member with his credit score because I'm saying I don't know if it's a he or she. If they have old credit, that is definitely helping them with their credit score. So that's a good question though. Now, the only downfall to that is you really want to pay attention and make sure at some point it's not being used fraudulently.
We have another question. This one is, what is the RBP percentage number?
The RBP percentage number.
RBP. I think they're seeing that under amount of.
Yes. That's a good question. I don't know what that means. It's risk-based pricing in our world, but I don't know how that ratio comes to be. And then there's going to be a lot of information on here that it's used in their algorithm, but we don't use it at all. And I never look at that number. But that's a good question. I tell you what, Amy, if you want to, I can definitely find out for you. And if we could maybe
send it back out to the attendees, definitely.
Absolutely. So I'll make a note and I'll definitely find out. We have I have our Equifax representative, which is one of the credit bureaus. I'll get with him and find out what that is.
Okay, April, I'll make sure that I send that out with the recording. Kayla, I think you had a question.
I have one more question. I think I might know the answer to it, but I'd like confirmation on it. So under my file summary at the top, the oldest open date, it's a date listed before I was born. Is that possible because I was on a parent's credit card that could have been opened before I was born? Okay, cool. I was
Probably
like,
not.
1989, I was born in 1994.
That's a good question, Kayla. I tell you what, can we visit offline? Because I'd like to take a look at that. And if there's something on there that's fraudulently, it may not even be fraudulent. It may just be an error, but I'd like to help you fix that because it shouldn't be that way.
Okay, I got you.
All right, good questions, guys. All right, let's see. I think we started. All right. So we've gotten through there, and then underneath, the next section is. This is where we actually get to the trade lines. Oh, go back one little notch, Amy, right there. Oh, and you'll see right here it says payment information. Here's where we're getting into this member's actual debts. So this particular person has a Cap One, which is Capital One, and that's kind of their account number based off of their internal algorithm. It's not an actual account number that we can use. The balance when this was cut was 6635, and this particular person has a credit card limit of 31,500. So in that particular case, the utilization is really good, right? Because he's not even close to maxing that credit card out. That's a seventh or so of the utilization. So that's what that top line kind of gives you. It kind of gives you a little snapshot of the credit card itself. Now, when you go down to the next page, which is still the Capital One credit card, you'll see his actual payment history. Again, you want to see all ones. So in this particular case, it goes back to, and every one of those is January, February, March, April, May. It starts with May of 2022. You guys see that? Because it only goes back a couple of years. So every single month from May of 22 through April of 24, this particular person made an on-time payment, which is exactly what we want to see. When you start getting the challenge credit, those numbers change to 2s and 3s, depending on what month they fell behind. So 1s is what you want to see. Again, that's the largest part of your credit score is the recent payment history. And then going down there, it just kind of gives you some detailed information. Capital One reports every single month. So you see the date report. It was probably very recently. It was opened in September of 2002. So this credit card is roughly 22 years old. Again, it likes to see that age. And then last payment was May. That line in between there, I'm not sure exactly what that means. And then it'll tell you the account type is a credit card. In this particular case, the account designation is individual. That signifies is this particular member is on that credit card by himself. It's not a joint credit card or an authorized user credit card. So this is an individual. He's got it all by himself. The next line item is Section 705, which is a local credit union. And this is a credit card, again, with a zero balance and a $10,000 limit. And it doesn't look like it's being used at all because the pay history is E's. Those are all E's, which means there's no balance and there hasn't been a balance for at least 2 years. Go down and we'll see another example of a credit card, which is Citibank, another very large bank. 1471 credit limit, $10,500 limit, and then again a perfect pay history on it. Now I want to find there we go, ULFCU. Oh, that's a credit card. Keep going down, Amy. We've already seen a couple of credit cards. TD Nordic, Hancock Whitney Bank. Keep going, Amy, please. ULFCU. That's all right. So that is a loan, a term loan, and you'll see that the balance is 17,508, I believe. And if you scroll across, it looks like the scheduled payment is about $509. And I know that because if you go to the very bottom of that line item, it says auto. So I know that's an automobile loan, right? And it's joint. The line right above it, it says joint. So that member is on it with somebody else. And then you can see the pertinent data there. The date reported, again, it's every month. The date it was opened, it looks like about 4 years ago, May of 2020. So again, this is a very good paying loan. The one thing in here you'll see is that middle column. It'll say high credit, and that's the amount borrowed originally. So to buy this automobile loan, this member took out a $38,000 loan, and I think that was 84 months. I believe it. And it looks like it's very blurry on my screen, but so you'll see the term duration. It's 84 months. So that was a 7-year loan. Anybody have any questions? Oh, there we go.
I have a
Hey,
question
Kayla.
on my end. In where you said that there's ones under the
Yes.
year with I don't have anything listed on mine at all. I can see the year, but there's no numbers.
Me
Okay.
too.
So what happens is that's from a soft pull.
Okay,
The credit bureau doesn't give us that information on a soft pull.
okay,
This particular person was applying for a loan, so it's an actual hard pull.
gotcha. Okay,
So
I was
in
like,
that particular
I
case,
know I'm
Kayla,
paying.
you're not gonna get that information on a soft pull. And
Okay,
They are a tad bit different. But I mean, you can see based off your credit score, you'll know if the payments have been made or not, if they're being reported paid. Now,
Gotcha.
also, so Kayla, just to kind of reiterate, if we're looking at the ULFCU balance 17,508, credit limit, actual payment, scheduled payment, and then the
Mhm.
last thing will show past due.
Mhm.
If you do go past due, there will be a number there. So if
Okay.
you miss your payment after 30 days, and if this particular person missed a payment, you see where it says scheduled payment of 509,
Mhm.
then 509 would also be in the
Yeah,
past
past due.
due if that person missed one payment. Now, if that person
Gotcha.
missed two payments, then we're talking about 1,018. So as long as you don't have a number in that past due, you're good to go.
We're good.
That's a good question, though. Anybody have any other questions? Okay, so we've looked at a term loan, we looked at a signature loan. We can go down a little bit farther. Let's see if I can't find. There we go. There's a mortgage. So you'll see the balance is $485,159. Scheduled payment is about $3,700. This member took out the loan in May of last year. That's why you're not seeing 2 full years of ones, because the loan's not that old. And again, you'll see it's a joint loan, conventional real estate mortgage and real estate mortgage. So again, we're covering this so that you can make sure that your own personal credit bureaus are accurate, because there are several that will show up not accurate, even though they're not fraudulent. They're just not accurate. So anybody have any questions on those? All right, so if we scroll down quite a bit, Amy, we're going to kind of go almost to the very end. So I want to show two other things here. And this is all loans or credit cards that this particular member has taken out throughout the years. All right, here we go. So right here is a directory of all the loans and credit cards that this particular member has had over the years. So if something is showing up on your credit bureau that doesn't belong to you, it gives you contact information on how to get in touch with them. So we got Capital One, Section 705, City Card, UL. So it's got a phone number and an address so that you can contact that creditor and say, hey, I've got something on my credit bureau. It doesn't belong. I need for you to look at it. So that's the directory. And then a little bit farther down, which is going to be a big deal. This is kind of, all right. So, go back up a little bit. And it's kind of cattywampus for us now, but normally it's it's all aligned for us. And this is the section that actually shows who's been looking at your credit for the last 2 years. Okay. So in this particular case, we pulled this member's credit in September of 2022. So this is a good idea, and this is a good place to look. You can go straight to this and say, hey, whoa, where are all these people from? Because sometimes this list might be 2 pages long, depending on what's happening in your financial life. So you know how many times you've applied for credit in the last 2 years. If you've only done it twice and you have 2 pages worth of this, something's wrong. We need to raise the red flag, get in touch with some of these people and see what's going on. Okay. So check to see who's been looking at your credit. All right. And then that's about it as far as the credit bureau is concerned. This is an Equifax credit bureau. Again, we can kind of help you guys look through it if you need to on your own personal. There's 8 of us here that are financial counselors, and we're all more than happy to sit down with you and kind of actually look at yours with you to determine what's going on.
And
Anybody have any questions from here?
one more thing I'll add on is, lots of you not sure, sometimes a lot of institutions offer like free credit monitoring. A lot of the questions that we get is, like if you have an account, Chase is real good about it. Us as a credit union, we also have it also where, we have a service where if you have a checking account or you have home banking, you can sign up for free credit monitoring. A lot of questions we get is sometimes the credit score that you're given through the credit monitoring is gonna be different than the credit score that you just received tonight. Like Jason said before, it's a soft pull, but 98% of the time, if we would do a hard pull, the scores that you guys got tonight on your credit report with Equifax would be the same score we would get. We would get a little bit of additional information, like he said on the credit history, but we do get a lot of questions about why is my credit score different? The matrix is different. He talked about matrix earlier. The calculations are a little bit different. They're not very far. They might be 5 points to 10 points off. So a lot of times, sometimes we'll have members call in and say, can you tell me what my interest rate would be? Sometimes the first thing we'll ask them, well, do you know what your credit score is? Well, yes, I have this credit monitoring and it says my credit score is, it'll say my credit score is a 700. But maybe when we pull it, there's a possibility it might be 720. It might be 690. For the most part, it's going to be a little bit off, but it's still a great tool to have. These days, you used to have to pay for these credit monitorings. You really don't. So if you're looking for credit cards, even with your financial institution, check to see if they have any kind of free monitoring service. That way you can get updates every time your credit score changes. You get an update. I know, and I'm only going off of the one that the credit union offers. Every time a member's credit score change, they get an alert. Hey, your credit score changed. Log into, it's called Credit Sense for us. Log in and it'll tell you exactly what happened. If you have a new trade line, it'll send you an alert. Hey, you got a new trade line. If you paid something off, I'm celebrating. I just paid my vehicle off last month, so I'm, very happy. But I got an alert telling me that I had a trade line paid off. So that's a good another monitoring system that I encourage everyone, if you don't have, to check with your financial institution. Sometimes if you have a credit card with certain credit card companies, they offer it free. Sometimes you might have gotten a notice and you might have thought it was a junk email, but definitely look into it. So that way, that's another way of protecting fraud. Like Natalie said earlier, like about twins, I have identical twins, and their social security numbers are one number apart. So it happens, it can happen, especially with juniors and seniors. We've seen it happen with siblings that are maybe a year apart. So because their addresses are always pretty much the same. I know their names may be different, but you'll be surprised on that. Another thing I wanted to just quickly talk about is it wasn't on the credit report sample that we have. Another big topic is student loans. A lot of people have student loan debt. I do now because I just had two daughters graduate college. Mine is the Parent Plus. Check on that. A lot of times right now, some people still have their student loans in deferment. If it's in deferment, look at your credit report. It may not say deferment. What it'll say is a payment is not due. So just be mindful of those things. There's a lot of things out there now that you can have student loan forgiveness, whether you're a parent or whether you're a recent graduate or you've been out of the, graduate a few years and you're paying it back. Make sure that that is reporting correctly. I think the government is trying to make sure that they get that right, but when you go to financial institutions, we look at that. If we know that you're in deferment and you want to borrow a small dollar amount and you'll pay the loan back in a year, we don't even look at your student loan. But if you're doing a home loan, if you're doing a vehicle loan that's going to be financed over 5 to 6 years, then some institutions do look at it, even though it's in deferment. You may have to answer questions. How long is your deferment? Can you provide information on how long you're going to be in deferment and stuff like that? So those are one of those things that, we also want to make sure that you guys are also monitoring. So that's another good way of monitoring your credit report. So,
If someone wants to establish credit, but they don't want to take out a credit report, what advice does this group have for them?
If they don't want us to pull a credit
Oh, I'm
report,
sorry. Yeah, I'm so sorry. If I read it wrong. If someone wants to establish credit, but they don't want to open a credit card, what is the best route to go?
we do have some very small credit building loans, and that's normally like $500 over a short period of time. And we actually look at that and we do them often because obviously we service the students of UL. So we do a whole bunch of credit building loans, $500 over a 6-month period. So we could do that. We could do a loan for anybody that's a member like that.
Yeah, and it'll fall under the installment process, so it won't be a credit card. And like Jason said, we might do it for 3 months to 6 months. Kind of just depends on what the member is looking for. So that way, if they don't want the credit card, we definitely could do that. So it would just be, to see what they want us, what service we can give them.
Amy, one more thing I'd like to cover real quick before we head on out is that the credit bureaus have they all have an app, and you can actually go onto the app and lock your credit bureau. So unless you go actually onto the app and unlock it, when somebody tries pulling that credit, it gets blocked immediately. So I would highly recommend that you go there and actually go through the online process and lock your credit bureau. And I have mine locked and I forget about it. I have to be reminded, hey, if you want to borrow money, you got to unlock it. So I actually go, and all it is just hitting the cursor, unlock it. They pull the credit, and I lock it right back right behind them. So nobody can pull your credit without you unlocking that. And I would highly recommend that everybody do that.
Great advice. Well, we're coming up right at 7 o'clock. What a great presentation. Do we have any additional questions before we sign off?
I don't have a question, but I did want to just say thank you.
Absolutely.
Because I've been wondering about all of these things, and it's nice to just talk it through with professionals.
Absolutely. Well, listen, Kate, if anybody has any questions, and I think we have on Natalie's presentation, we have some contact information, like on the last 2 pages or so. If you want to throw that back up there and they can take a look at it.
It should be the very last page of the new presentation that I sent you.
Oh, great. And I'll put it in I've been emailing everyone the
Good.
recordings and all of the contact information. And so I'll make sure that that's in the presentation. But you've got glowing remarks in the comments, and it sounds like this was very helpful, and sure appreciate you guys. I hope everyone online also sends a shout out. Thank you to y'all. We really appreciate you providing these credit reports free to those attendees online. That's not always the case, and I know that this is very helpful, especially as you're learning what all this means and how it affects you.
Well, great.
All right. So for everyone in the alumni office and Monica and the UL Federal Credit Union team, I hope you all have a great night, and thank you so much for attending. Watch your emails. We're going to have some more Financial 101 series in a couple months on some additional topics. So we're not going away. And if you have any ideas of what topics you would like to see, please email me. I'm amy.armstrong@louisiana.edu, and we'll work with these groups to bring them to you. Monica, Natalie, Jason, thank you so much. Everyone have a good evening.
You too.
Thank you, guys.
Thank
Bye-bye.
you.
Bye, guys.
Bye-bye.